Now, this jobs report is the first big data point for the Fed after its latest meeting this week. Let's get to our Fed pro, Brian Cheung, in the newsroom here. Brian, how do you think the Fed will interpret this report?
Well, it all has to do with how the Fed described the labor market in the meeting that was not so long ago, just on Wednesday. In that meeting, the Fed statement noted that the labor market remained strong and that economic activity had been rising at a moderate pace because of that, again, supporting Chairman Powell's outlook that the economy, at least in the U.S., appeared to be chugging along quite well, said that job gains have been solid. So you have to benchmark the July jobs report against that assessment when you see that non-farm payrolls came in basically as expected at 164,000, slightly below some Wall Street estimates like those from Goldman Sachs or Morgan Stanley, but kind of in line with what we've seen as the consensus estimates quoted, on your Bloomberg terminal, whatnot. That means that things have been chugging along quite well, as we've seen compared to the last June jobs report. Now, also interesting because the unemployment rate, again, remaining steady at 3.7%. No change between the June jobs report and the May jobs report. So you're seeing that this maybe doesn't change all that much. Our average hourly wages, however, ticking up slightly does say that maybe there could be some inflationary pressures coming along in the future. We have seen that a tighter labor market has resulted in higher wages in the aggregate over the last 5 or 6 years, but we haven't really seen that translate over into inflationary pressures in prices. So whether or not that makes the Fed, consider those types of factors will be a question. For right now, looking at Fed funds futures markets, 84.2% chance of a rate cut in the September meeting, but it has not been updated since we've had this new July jobs report, so we'll need to watch for that as we get more updated information on those contracts futures.
Great. Curious to get that number from you. But does the possible escalation in this trade war, in essence, overshadow this report, which we've been dissecting here and have pretty much said it's a pretty darn good report?
Yes, for the most part, it seems like the manufacturing aspect of things has been okay, not so great, depending on who you're asking. I mean, the manufacturing gains for this July report, I believe, was quoted at 16,000 jobs in July, which is not that much of a change. Manufacturing has, on the whole, been kind of lagging in these types of jobs reports in the past few months, but it really has been in business fixed investment, kind of on the GDP side of the equation, that's been more alarming. We've seen a lot of activity lagging ever since the tariffs got ratcheted up, and obviously with the threat now of an increase 10% on the remaining goods that are currently not tariffed, that does present a headwind for the Fed as well. That might be what the Fed might describe as a downside risk, again, heading into that next FOMC meeting on September 18.